Hey everyone, it's Siddharth here coming to you with another video, and today's video topic is how inflation affects your investments. So I'm talking about this topic because for me inflationary effects are quite an important effect when it comes to your investment returns. And the investment returns I'm referring to are returns that you have from investing in stocks, investing in bonds, any form of investment that gives you a return over time. So inflation obviously is the change in price levels across different price indices in the country, which then means that as time goes along, that there are going to be changes in prices, which will obviously mean there's changes in terms of, how your money is measured against inflation, which also impacts your investment. So let's just say, for instance, that you've invested a certain amount in a particular type of investment vehicle. It could be stocks, it could be bonds. And let's presume, as an example, that the inflation rate in your specific country is around 6% on average per year. So that means your price levels every year are basically increasing by 6%. So if you had an investment that was giving you a return of 5%, what it essentially means is that your investment return, even though it's positive, is actually not giving you a return that matches inflation. So, in effect, your 6% inflation rate versus your investment return of 5% means that you're losing about 1%. So, this is a core aspect that a lot of people tend to forget to look at when it comes to evaluating their returns, because they get excited by the positive return. And I've been one of those as well, which tends to forget that we need to look at inflationary aspect as well in terms of it. So you need to start asking yourself, how exactly are your investments actually giving you a positive return that is also protected against inflation? Because if it comes to a point where you start withdrawing money from your investments and you find actually that even though you've got a positive return, it's not giving you, the inflationary protection, it becomes a bit of a problem. So the question is, why is this relevant? Because if you look at economies today, a lot of economies, will have some inflationary effects. Then you need to start asking the question that if you're an economy that is facing a lot of inflationary effects or a high inflation level, how is that impacting your investments? So what I would suggest is perhaps, start evaluating your returns on your investments. Measure them, in terms of the past couple of years. Perhaps you could go back 3 years, you could go back 5 years, you could go back 10 years, depending on how long your investment is. And what you can actually do is, in your specific countries, you can actually check what the inflation rate is. In some countries, it's measured in different ways. In South Africa, for instance, it's measured by what's called the Consumer Price Index. And those kinds of statistics can be available on government platforms which actually provide, the information on that. So it's very critical to start looking at those performance evaluations. If you have a financial advisor, perhaps you can ask them to give you a sort of summary of what your investments have done over the last year, 3 years, 5 years, 10 years, whatever period it is, and look at the inflationary rates based on that and see actually if your investments are giving a positive return that's over and above your inflation return. So for me, personally, from my own experience, I feel that, I kind of feel like investments in those natures or those types of entities like stocks, bonds, you name it, various types of those are investments I've kind of moved away from, because for me personally, I want to see what is the return that I can actually get that beats inflation also on a consistent basis. So you also need to start asking yourself that if your investments are actually not giving you a return that is beating inflation, what are your alternatives? And perhaps you need to start educating yourself to see, okay, what alternatives can you find? I believe a really good alternative is to look at your safe havens or your traditional safe havens. So these can be your precious metals like silver, gold, anything that is, traditionally been considered a safe investment. You could basically do your research online. You could also send me a question, ask me what I think could be alternatives. Or if you have an alternative that you think actually is something that you want to consider, but you're not sure, perhaps you can sort of show me what it is that you're looking to put your money into. But the main premise is, can your actual return in that specific vehicle that you're putting your money in is actually going to beat inflation? Because that's what you want at the end of the day. Because if you're beating inflation, then it means essentially that you've got good purchasing power with your money, and that's really critical. So I hope this video has given you some critical thinking about inflation and how it impacts your investments. And hopefully it'll help you to start thinking about how you look at your investments going further. I hope you also have subscribed to my channel. If you've not, please click on the subscribe button that you can see on the video here. And if you want to receive notifications every time I launch a new video, you can actually click the little bell symbol that you'll see on the bottom. And please also look at the links below where I've shared all my social media profiles, where you can connect with me, or if you want to send me an email, you can connect with me on email. And you'll also see what I'm doing when it comes to investing and where exactly I keep my money. So I look forward to speaking to you in another video. Take care. Bye.